The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. Good to be back and see how it goes. It's been a little bit of an ordeal, and I do thank everyone for the white light, the best wishes, etc. But it's you got to know your body, and I fortunately listened to myself for once. And instead of continuing in my tennis game, I stopped when I felt some pressure in the throat. I'm going to talk about it because I think it's really important in terms of looking for certain signs, symptoms, certain cognitive process that goes on for many of us that have had particular ailments. And if you can recognize the signs, it's just like 90% of the work is done. Because if it was the old me and I just kept on playing tennis, the result would not have been very good. So I was able to stop playing. To my partner, I often talk about this is a person that we play maybe 6 times a year, pretty good friends, been playing for years and years, and I always say we play to the death. He wins one set, I win the other set, and that's the way we do it. We're always even. And we just give every single thing we can to every single shot. And I stopped and I said, you know what? We joke about playing to the death. This is not a good time. Let's just keep it as a theoretical subject. And I'm going to stop right now and take you home, go back, tell my wife, and within minutes we'll be on our way to the hospital, which is exactly what happened. So I am fortunate that here in the Boston area, I'm sure many areas around the country, but certainly in the Boston area, we have just incredible physicians. And at the Beth Israel, they were just phenomenal. They have an incredible team. In fact, since then, I've heard fabulous comments. I didn't need to hear it. I heard it, and I experienced it. Just the personnel, the nurses, doctors, just absolutely fabulous. And so there it is. And as I say, I will talk about it because recognizing symptoms, it's like the market. If you don't look and see what's going on, you are surprised. And if you're surprised, it means that you aren't able to, you're not at that moment ready to assess in a very a logical way as to what's going on. And one of the symptoms I had was where I just felt a pressure in my throat. And that's a pressure that I had recognized from way back, decades ago, when I'd actually had a heart attack. And I've always been I've always been very healthy. My medical records don't show it, but I have. So I was able to, because I was fit, I was able to see through this in a very quick way, and I'm very fortunate for that, and thanks to my wife and my family and to everyone that was involved. So I'm back, and let's just get straight to the market. As far as the market is concerned, I'm going to show a chart right now. I spent a lot of work over this particular period. The main thing is really the voice. It was recommended. Actually, the recommendation is with a quadruple bypass and a valve job that I had, is to not do anything for 4 to 6 weeks. Well, just that's beyond comprehension. So I took the break that I needed, and hopefully we'll see. The main thing was to be able to keep the throat tracked open and be able to vocalize as for the full hour and see that everything goes well. So far, I feel very comfortable about that. Now let's just get to the nitty-gritties. There's a book that I was reading. It was given as a gift. In fact, it's funny, 3 of us were given it as a gift by someone's wife. And the 3 of us, we were talking about it last night, all reading it. We're all at about the same place. It's by Bill Bryson, One Summer, America, 1927. And I will be talking about this because I know that he brings it up as 1927, Lindbergh, you can just go through all the different, Al Capone, you can go through all the different things that happened in the summer of 1927. You got Herbert Hoover, Al Jolson, the jazz singer. You've got baseball. You've got the New York Yankees. You've just got so many things that were going on. Henry Ford, but that's really not the issue. That's history. I'm a historian, and I'm looking at this and I'm saying, oh my goodness. Sacco and Vincenti, they're just a bunch of things. And I'm saying to myself, what am I looking at in the charts at this particular period that could say the summer of 2000 and something, maybe 2011, maybe 2012, maybe 13, I don't know. Is there something that we can look at now and say, wow, the same kind of emblematic, iconic issues that were there at that particular time? And people talk about Babson. Babson was 100% correct, except he was 2 years early. 2 years early means in the stock market that you can see a market double and then give back incredible gains. And you're wrong, even though you turn out to be right in the end. You're wrong at the time. And he kept saying, I will be right one day. There were not that many. There was a writer for the New York Times. If you look at the New York Times, I'm sorry, it wasn't the Wall Street Journal. It was the Wall Street Journal. If you go through the Wall Street Journal, as I did in the microfiche, going through back almost every day of the New York Times and the Wall Street Journal of the 1920s, there was a writer of the Wall Street Journal that he was really good. And he was one of the few people that I noticed in whatever I could garner from that particular period, who was very perceptive about what was going on in the stock market. He wasn't too early, he wasn't too late. He was talking about exactly what was happening. So yes, there are people at certain times that are able to pick major tops. But what I wanted to show you is a chart, and this is for me very interesting. I'll be spending a lot of time on it this week, and I hope to produce something for my subscribers in great detail as to what I'm looking at. There's a chart that says, are we here? And it shows a peak D. I think that was March of 2007. Let me just double check. Yes, March of 2007 at 12,795.93. The following month, and that was a red candle, the following month was a down candle, making a peak D. Held a 9-period moving average. I remember this period so well in 2007. Market kept going higher. It went all the way to 14,021 in July of 2007. Almost everyone said, this is it. And yet, the technicals, based on the technique that I used, said, no, not yet. And then we got leg F and then a peak F at 14,198 in October of 2007. So the question is, are we looking at a very similar period right now, that we were about to make a peak D, not a very deep peak D, major support on the 9-period moving average of 15,259, so somewhere between 15,400, maybe 15,259, if certain things happen. That is, if we continue, and the next day or two is going to tell us a great deal more. At this particular point, the VIX is still holding quite well at 15.62. So the real question is, are we looking at very similar details that says that the market could go up, continue to go up, even after a pullback here, and continue going up for at least a number of months into 2014, maybe even into the first quarter, even the second quarter of 2014. There are a whole bunch of things, but together with that, you also have to put in what's happening in terms of the presidency. Because if you go back and you look at the presidency of Hoover, Coolidge, Coolidge-Hoover, there are certain things that were happening in the stock market that are being replicated in many ways today. So I'm throwing that out. I'm throwing it out as something that I spent a lot of time on. I'm in the process of putting together all the pieces. I'm not going to be able to make a decision on what or where or how, but I'll be able to put the pieces together and say, these are the very critical pieces in my work that have stood the test of time before. If I'm able to correctly decipher them at this particular moment and continue to focus on the weak sectors and the strong sectors and the rotational aspect of this market, meaning that even with this overbought condition and a technical basis, and it is overbought in many aspects, there is still a huge contingency out there that has not traditionally put their money back to work as they normally do. And that is middle-aged folks, people in their late 50s, in their 60s, and early 70s that have always historically been in the market and for quite some time have been stepping out and have not participated. Are they going to be sucked in? Is this a kind of market that eventually is going to suck everyone in and then come down? Or we're looking at, is this a peak D and we're going to be looking at something far more major? I don't know. But my critical thinking at this particular point says no. There is still more to go on the upside, however deep this particular pullback is. All right, let's go to the numbers. The Dow is up 138 to 15,893. The S&P is up 11 at 1787. The Comp Index is up 27. You've got gold up 8 at 1243. Silver's up 26 at 1987. And what is today? Today is the 16th of December. And we've got high-grade copper at 332, just stuck in that trading range. Crude oil is stuck. It's at 97. Now, this is going to be very interesting because bonds at 124.5. You've got, 120 TYH, USH, TYH. All right, let me just check something here. USH 14. Yeah, 129. Oh, almost at 130. Now, what's fascinating to me is that bonds have actually held, if I go to the very long-term U.S. contract, we are just sitting on that major support level. In fact, because it's a continuous contract, I always have to move the line. I'm not afraid to move the line. It has to be moved because it gets smoothed out. So this line says that the critical level for bonds to hold would be if the 30-year continuous contract breaks underneath 125, 126 and 3/4 is about the level. I'm giving it a little room. I'm saying you break 125, and that'll be the first time in a long time that since 2011 that the major uptrend, the up channel, has been pierced. And of course, we have to wait for the entire month of December before we can even talk about that. And one other thing that I wanted to just show right now is that the dollar has not been moving up. In fact, it's been moving down. It is stuck, making an arch formation in the weekly, and the euro is still, I don't know if it's peak C or leg C. Yeah, peak C, and it looks like it needs to make leg D above 1.3810. Hey, it's great to be back, and I will be right back in a moment with Garo and Newport Beach, and we'll be looking at PXD, I believe. Dow's up 135.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. We are back at 877-927-6648. And let's go to Garo in Newport Beach. Hi, Garo. How are you?
How are you, sir?
I'm beginning to do well. Thank you very much.
Good. Regarding PXD, I need your opinion, please. PXD and CLR, both of them are very promising for their weekly chart, especially the PXD is getting the stochastics at the very bottom and trying to curve. What is your idea, sir?
Okay, PXD is Pioneer Natural Resources, exploration, producer, oil, natural gas. Made a peak D in the monthly chart up in the 220-something area. It's pulled back to 180.68, 58 right now, up 83 cents. Weekly chart made a peak F. So in a sense, I've got to look at this and I've got to say, okay, weekly chart has pulled back 50, is that 40? Yep, almost 50 points, trying to stabilize. Stochastic is at 13.90%. The MACD is still expanding. So it's not so good, but the monthly chart fast-moving average of the MACD is still holding really well. And we saw this happen in gold, we saw this happen in silver in the monthly charts from that September, October 2011 was it high. And what we're looking at this particular point is how much and what criteria would I be looking at to say that the weekly chart is attempting to stabilize but it's the daily chart that is forming a pattern that has the potential to move higher. Now, there's a pattern that I look at, and I call it the restart. It's got nothing to do with the instant restart. Restart says that you get a signal that says it could very well be a buy signal to possible buy mode, but you start off with a buy signal, and then that fails. But the price does not go underneath the initial low bar. In this case, the low bar was 172.60 on the 29th of November. On the 29th of November, that's when we saw the market tops in most of the indices. This thing made a bottom. Now, it went quite sharply up. It went to a single leg A at 186.70 on the 5th and 6th of December. Then it turned around. Then it tried again, and it had a little single leg A up for an A, which also became an A minus because it then made a higher, lower gain. And now it's in another little A, but it's in a very small A. Now, these are sometimes feeler moves in the sense that the reason why I call them restarts is that as long as the technicals, in this case the stochastic, is rising and the MACD is showing good signs, I agree with you that there is a good chance that there will be a breakout, and the breakout will be towards the upper part of the most recent range, and that says 186.70 will be tested. But when you're looking at a price like this, I also look at time. And in this particular instance, it's used time, and it hasn't garnered very much in the way of price. I like to see the technicals moving up with a commensurate price movement. In other words, if the technicals look like they're acting quite strongly, I want to see the price moving up strongly and making higher peaks. So far, we're making lower potential peaks, but you haven't broken down. You're making higher lows. So now, this is what I would do. You would probably be wanting to look at the 120-minute chart, and if you're looking at the SAR, you'd be looking at about 183 for a breakout for this to really get going. That's my suspicion. I'm looking at this and I'm saying, in anticipation of a pop to the upside, and it's failed thus far, having gone from 227.42 all the way down to the 172 level, it's had very, very weak rallies. But at this particular point at 180.37, if there is going to be a move, this is a move that not only should take it above 183.75, the high of the 10th, it should in fact take it above 186.70, the high of that, what did I say, it was the 6th of December or something? 5th of December. So how to play it? Now, I know that you would prefer to buy strength, but I'm going to look at this in a slightly different way. And I'm going to say, with a risk of 1 point, I would not even risk more than 1 point. It would be 1 point maximum, 170.28. It's at 180.33. Oh, it just popped as we were talking. Let me do this. We've got a break coming up. I'm going to give you, I'm going to take a moment during the break, and I'll give you my parameters that I'd look for, but what would be the confirmation of the move to the upside, and what would be the confirmation for me that it needs even more work, sideways action to retest. So I'll be right back with Gary in Newport Beach and Pat in Dennis, Massachusetts, straight after this.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, and the Dow's up 144, S&P's up 13. And what we're looking at right now is PXD, which is Pioneer Natural Resource. We're looking at it for Garo in Newport Beach, California. Garo, I think that I'm going to make 2 recommendations on PXD. One is, you don't have a position right now. Is that right?
No, sir. I trade it. I may trade 2-3 times a day at the peak or at the lows.
Okay.
Yeah.
So at this particular point, I think it's kind of neutral. I don't see very much. I'd be inclined, my preference would actually be to be trading strength. I know you like to trade strength. I would prefer to trade strength. If you were to nibble on it now at 180 with a 1-point stop, I think that's okay, but it's just not showing the real strength. And I suspect what's going to happen is that it isn't strength that it just pops up above today's high of 180.60. It needs to go 180.60, 182.20, 182.40. It's got to be almost like you're at an auction. It's just got to be moving up with each higher bid. That's the way I would prefer to look at it. Right now, it's an arrestive period. If it doesn't break to the upside in the next 2 days, I think it's going to do some testing of the 177 to 175 area. I think this is one that I would much rather buy as it's starting to show upside momentum. And it's also one of those stocks that when it does show upside momentum, people tend to buy it. It's a stock that has a core following, and that following has for a long time been to buy it on the up move, and I think that's what I would stick with. So I hope that helps you.
Yes, sir. Absolutely. Very good. Very good.
Okay.
I'll wait.
But keep your eye on this one, but I think that's my opinion is right now. I'd buy strength. I wouldn't actually buy weakness. Thanks for calling, Garo.
Thank you, sir.
Let's go to Pat in Dennis, Massachusetts. Hi, Pat. How are you?
Hi, Basil. I want to say welcome back, and we've all been missing you. It's not the same without your market analysis.
Oh, I do appreciate that. Thank you so much. But I've been missing everyone. Believe me, my wife has been, every day I've been saying, I got to do the show. She said, the doctor said, no show. Anyway, she off to work today, and I took the opportunity.
Well, I know your wife probably told you that the anesthesia hides out in your fat cells, and it's going to come out slowly.
Well, you know what? It's very interesting you say that. That's really one of the things she said. It's not what you're going to. It's not what you know. It's what you don't know, and that's what I'm concerned about. So I'm really watching myself very carefully. Yes.
Yeah, you're going to be very tired until all that anesthesia works its way out of your system.
I think you're absolutely right. Yes.
So for our sake, don't push.
I won't. No, believe me. The days of pushing are over. I'm being a very good boy.
Oh, good. If you get a chance, can you just go quickly through your Dow Quartet and give us an idea of what you think?
Actually, that's a very good opportunity to do this. So, folks, what we're looking at, Pat asked about my Dow Quartet, which consists of General Electric, IBM, Triple M, and UTX. And what's really interesting is that GE is holding well. It's a high-level consolidation. It's at 26.90. Well, I should also mention that in my former subscribers, we are long GE right now. It's at 26.92. It's not even the daily chart that is impressing me. It's the way up until Friday of last week, the weekly chart had held so nicely, and the monthly chart. So it's got a peak D in the weekly chart. It is in leg E with a possible peak E if it does not go above 27.19. Let me just double check. 27.50. Let me just type that in. Oh, there it is. 27.50. If it goes 27.51 in December, it extends leg E. Now, what's really important about this is that in the monthly chart, the MACD is still expanding, and the stochastics at 87%, which is very good, and the on-balance volume isn't even close to being overbought. The 120-minute chart has gotten to a leg ABC. This is a peak C, holding quite nicely. My suspicion, looking at a week worth of activity, is that there's a chance that the upside in GE is actually limited to the very low 27s, that it doesn't make 27.50. This is my thinking at this particular point. But in fact, what it's going to do is it's going to try to test the 26.52 and then 26.30 area, maybe this week, maybe early next week. But if it can have a high-level consolidation, that whole rotational aspect that I keep talking about, and I thought that GE would probably be the stock of one of the Dow stocks of 2013. It has done very nicely if you're looking at it from maybe the 21 area to the 26. But, 4 or 5 points is really nothing. It's a nice percentage gain. That's really not what I'm thinking GE is going to do. My suspicion is that in 2014, GE is really going to kick in, and it's going to go into the 30s. So I'm anticipating that there is downside activity to come in GE. It might not be all that much. It could take it maybe to the 25.20, maybe even to the 24.50 area on a worst-case basis. A lot's going to happen over the next 2 days on whether GE is able to climb into the low 27s and hold, or whether it immediately starts going to the 26.60s. So that's that. Now, IBM had a really nice counter-trend move earlier on in November. It ran up from the 200-period moving average at about 173. It bounced all the way to 185, gave it all back, and is having a very good session today. It's up 4.21. And that's the reason why I keep saying that you cannot ignore the rotational aspect of this whole corrective process. It's been in place since 2010, the summer of 2010, when I noticed that the market wasn't really giving back a lot, but what it was doing was rotating through what had been good stocks off the bottom to stocks that were lagging. Now, IBM has done almost everything that I anticipated in a pattern that I call the flat base restart. It went all the way to a peak here, 215.19, and that was that was in March of this year, and then it pulled back in a very steady move. It went right back to where this particular pattern says is the most vulnerable area, and that is 177. And what did it do? It went down to a low of in the 172s. So what it's saying is that IBM will become extremely vulnerable if it was to break 172 to 170 key support. But if this rotational aspect continues, there could be another bounce. And if in this bounce other areas become weak, but IBM is able to hold, and IBM is able to break above 186.24, 9 points away, but I'm really looking at a 3 to 5 week span without breaking 170, that's going to tell me that the rotational aspect is alive and well, and that constantly there are fund managers that are looking for beaten down stocks, famous name beaten down stocks, and they want to go into those for at least a good counter trend rally. And those stocks they have to find support and hold. And in IBM's case, 172 to 170. Triple M was an absolute superb winner from the 2011 or 12 low of 68 all the way to the 130. What was that high? I didn't type in 134.16. Now, 134.16 is an all-time high. It is, for me, one of the key Dow stocks, Triple M, 3M, multinational conglomerate. And even more important is that in this particular move that's happening right now, this is a potential peak E. It's going to be real difficult for Triple M in the next couple of weeks to go from 127.31 to 134.17, which would be a new high, which would extend leg E. So as I'm putting the whole panoply of important Dow and Dow type stocks together with the QQQ series, the NASDAQ stocks, I'm beginning to get a picture, and the picture says there's just a really good chance that we will probably make a peak D in the Dow this month, and that we will see these particular peaks in the monthly charts of the stocks. And UTX, well, first of all, let me just say that Triple M has to hold 125. If it breaks out, and it's only 2.5 points away, and I suspect over the coming weeks it is going to break 125, it needs a bit of a timeout. And that's part of this rotational process, that the stocks that were some of the very best leaders are the ones that are going to take a timeout. How they hold as support is going to be imperative in terms of watching to see whether there can be leadership that comes back in these stocks, or whether there's going to be there's going to have to be new leadership in the Dow 30. But in this particular instance, that's the parameter. And the Roman candle of the week of the 6th of December with 132 round number high and 125.15 low says that at any point, in fact, we're close to it now, but if there's any moment that the price goes to 125.90 in Triple M, that the bottom of that candle of 125.15 will be tested and probably broken. So I'm looking at limited upside in Triple M with more to the downside than the upside over the coming 3 weeks. And UTX, which is my pilot light indicator stock, has done a high-level consolidation. It keeps taking every single opportunity to try to get back to the most recent high of 111.91, trading at 108.65, but it too, looking at the weekly chart, says there's a very good chance that the upside, it could break to a new high, but that high could probably be curtailed between 112 to 113. More importantly, it is how does it handle between 109 to 110 on the upside and 106 to 104 on the downside. So if I was to give you a price, a series of parameters in the very short term and the intermediate term for UTX, United Technology, I would say that the upside has a chance to try to test it's at 108.65 right now. It has a chance to push a little higher, but the candle of Thursday, I think it was on the 11th of December, with a high of 111.20 and a low of 108.65, everything about it says that that candle is going to be really tough to break out and close above at this particular point. So I'm looking at United Technology, and I'm saying together with GE and Triple M, there's a chance that we could be looking at a high-level consolidation. United Technologies will break down if the 9-period moving average of 102.54 is taken out on the downside. I'm suspecting that over a period of 3 to 4, maybe even 5 weeks, there's a chance that 103 to 102 could be tested on United Technologies. So when I try to put the whole picture together and I try to add to it the volatility index, the volatility index is holding at a peak C. This is going to be tough because the Dow is up 148 and yet the VIX is only down 11 cents. So if this is going to be a single leg A up, I'm not sure yet, in the very short term, say the 120-minute chart of the volatility index in a new move. Let's see, this is A to B. F. Now, all I can do is give you parameters. I'm not going to try to outguess. That's just already moving too many steps ahead. I'm just going to say to you that if, I don't care what the reason is, if for any reason the VIX, which is at 15.65, starts to trade above 16.50 to 16.90, it's going to curtail the upside for the general market. If the volatility index, which is at 1565, breaks underneath 14.57 in the next 2 to 3 sessions, it's going to say, uh-oh, be careful. Buying pressure is coming back into the market, and we could start to move higher. My assessment of what I'm looking at right at this particular moment, let me just grab this particular chart right here, is if I'm looking at my daily chart, which I sent to subscribers, and I'm looking at the Dow with the notation, every day's notation, the candle that was formed on Friday, the doji candle with the move up today above the 9-period exponential moving average, still hasn't taken the fast moving average, the 9-period moving average, the fast moving average, underneath the 9-period moving average, the exponential. So that's saying that at this particular point, this is maybe a one-off move to the upside, and over the next 2 days, the parameters should be very clear. A close above 16,030. Today's high is 15,930, but a close above 16,030 could push us even higher. A close below 15,820 says rally over when we're going to go to a sideways to down move. Pat, I hope that helped you.
Excellent. Very thorough. Thank
Since
you, Basil.
1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I'm back. This is the Monday edition of Tiger Technicians Hour. I probably will do Wednesday. I'm going to give myself a break tomorrow. I just love being back. I missed it so much. I missed you all. Just got a wonderful email a moment ago. Dear Basil, you don't know me from Adam, but I'm one of your many loyal listeners. I learned so much from you, and I'm so glad you're back and healing. It gives me the chance to take the opportunity that I should have long ago and tell you how much your work means to me. Your teaching and thinking are most appreciated in health and healing, and lots of Tom's white light. Best regards. Signs and name. I really do appreciate that. That's I just know that we all here at TFNN, us hosts, we have such wonderful listeners and such loyal listeners. We all appreciate you very, very much. We couldn't be anything here without that. And there are a couple of things I want you to do just right at this very moment. As I say, I'm going to give myself a break tomorrow. I'll be back on Wednesday. I believe I'm back. I'm not going to rush it. I believe very strongly, as Pat said, great caller. Pat, as my engineer said, she's a great caller. Yes, she is, Pat. Thank you very much for calling. And yes, there's I was under anesthesia for 4.5 hours. It does have an impact. I do respect that. So there are a couple of things that I want to do. First of all, my opening call, I was able, very fortunately, it's something I've done I've made a market call, a Dow call, as long as I can remember, going back to the 1980s, every single day. Just something I've always done, no matter where I've been in the world or what serious things are going on. So it was not easy, but I managed very quickly to get right back into my market ladder. My subscribers didn't really miss more than a day or two. And so that, fortunately, we are long and we are short. I did take a long position this morning on a stock that I've not had much success with, and we didn't have today. Took a 10-cent loss. I'm sorry about that. But other things are working very well. And one of the sectors that we are short is still working extremely well. And that's the reason why I say rotational market. That particular sector to me is done. And therefore the money is going to flow out and go somewhere else. Where will it go? That's going to be the big decision. As a decision has been made, very often you get just a rotational correction as people are making up their minds, where should we deploy the money? It does get deployed. And I'm watching certain sectors right now that I think are actually beginning to do very well again. We might go back into those. So as far as money, there are no shortage of good stocks and there's no shortage of bad stocks at this particular point. That's the reason why I cannot be fully bearish and I cannot be fully bullish. I think you have to split. You have to be very, very selective. That's what we're doing right now. When I'm looking at the different sectors, what's very important is that how even within a sector, which stocks within that sector are going to still show residual strength and which stocks are actually done. And that's going to be very important, because if the majority are done, they will drag that sector lower. So I'm watching certain things very, very carefully. Now, let's do a couple of things here. I've given parameters. I'll just give them very quickly. The volatility index at 15.67. If it goes into the 1590s or the 1630s, it's going to say selling pressure is there. Just this is a little optimism that the Fed might do something if the market's already taken it into account. My suspicion is that there is some volatility to come with slightly lower highs and slightly lower lows, and that it would be organized, and there will be one sudden slide, and that sudden slide could create a low, a really tradable low. That's kind of what I'm thinking. For the meantime, just on the very short-term basis, 16,030. Break above that, says, aha, maybe we're going to retest the old highs of 16,174. But a break below 15,825 to 15,790 on a close says, we're going straight down. Thanks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.